Welcome to this panel. The future of AI is decentralized, and we'll touch, of course, on DATs. So thank you all for being here today. Very excited to get that discussion started. Let's start with a quick round of intros. Start with you, Dany.
Thank you so much for having us and for hosting this spectacular conference. I am Dany Vaiman. I am the Chief Financial Officer of a DAT. It's called ZeroStack, and we trade on the NASDAQ under ticker symbol FLGC. That's FLGC.
Hello, I'm Lorna Burchell, and I'm the Vice President of Investor Relations with ZeroStack.
Hi, I'm Amol Sarva. I'm the founder of a venture fund called LifeX Ventures, and we do early stage. We do a lot of things around tech generally and in health in particular. And we're one of the early investors in Zero Gravity Labs in Zero G, actually, as a piece of AI infrastructure that I think a lot of people are going to need.
Hi, everyone. My name is Varghese. I lead strategic partnerships at Zero Gravity Labs. I'm also helping with the accelerator program at Zero G. And what we're building at Zero G is the largest AI L1 chain. It is EVM compatible. We have storage. We have compute. We have data availability. We bundle all of that in an operating system. And we serve any builder on any chain, but our chain is hyper-optimized for AI, and it bridges the gap between Web 2 and Web 3 AI. And so my role as strategic partnership lead is to meet amazing people like yourselves, meet the builders, and then invite them onto our chain.
Yeah, so let's jump right into it, right, on the decentralized AI and digital asset treasuries. So you guys at ZeroStack, right, are recognized for being the first decentralized AI and largest DeAI digital asset treasury. So maybe for you, Dany, can you give us a quick overview of ZeroStack, what you guys do, and where you sit in the landscape?
Yeah, absolutely. So I think the first thing that is important to note is we believe in a bullish case for DATs. We actually think that this is the beginning of something that's going to get much larger than what it is now. Just like you had a phase where asset management, private equity, active managements of investments became a central element of the US economy, we think as crypto is becoming more mainstream and is being adopted and being institutionalized, the same kind of techniques, finance, debt, equity raising, securitization, all of these techniques are going to be now applicable to crypto, and we think this is just the beginning. The main asset in our treasury is Zero G, as we noted. We hold 123 million tokens. We also hold $30 million of Solana in cash for liquidity.
And if we take a step back, what was the origin of ZeroStack?
Yeah, absolutely. The origin was that there was a period in time where investors, institutions, and the public at large realized that the time to set up a DAT is now. And you saw a proliferation of some of the more traditional assets like Bitcoin, Ethereum, Solana. But then you also saw on the back end of it a proliferation of some of the altcoins and some of the utility coins, and we're in that category. And so we wanted to be the first, but we're definitely not the last, and you're going to see many more come on stream. Of course, with the markets and the economy, you're going to see the volatility of crypto and the volatility of the stock markets compound on one another. But that's one of the benefits, is you could use strategies to mitigate that.
And when we were preparing for this panel, we just also discussed, what type of infrastructure you need behind it, and what are the differences between, putting things into a DAT versus an ETF.
Yeah, that's a great question. And I would say this is very similar to asset management of investments and private equity. There is a case to be made that if you put your money in an S&P 500 index fund, you're going to get a return that's going to beat a large component of active management. But on the flip side of it, if the active management is successful, which is what the DAT is, it's designed to be an active manager of cryptocurrencies, then the returns are going to be compounded. So it's a question of passive versus active management, and we believe that active management, using the strategies that we'll discuss, will result in a much better outcome. And
to build this, you need obviously a world-class team. So moving over to you, Lorna, if you could tell us a bit more about the team behind it, the experience that you bring together, and what makes it special.
Certainly. I'd like to start by highlighting Daniel Rees-Farah. He is our CEO at ZeroStack, and Daniel was the founder of Erebor Capital, of which he's become a recognized asset and entrepreneur. He originally started his career in his earlier days as the founding CEO at Oro, which is Canada's aviation cybersecurity firm. Since then, most recently, he's been recognized as pioneering and structuring of the of the first Solana treasury vehicle in the United States. Daniel is educated from the University of Cambrai with his master's in computer science, as well as he has his entrepreneurship diploma from MIT. He's also fluent in 7 languages. We also are very honored that we have Michael Henrich, who is the CEO and founder of Zero Gravity. Michael serves our board as the executive chairman. He not only increases the value and strength in our leadership team, but he also ensures there's a streamlined bridge between Zero Gravity and ZeroStack.
So we touched a bit on team, market size. Let's move over to the investing in it, right? If we look at the whole landscape, Amol, can you tell us about decentralized AI as a whole? What is getting you excited? Where do you think it's headed?
Yeah, I think it's probably just worth introducing what zero gravity even does. I don't think we said anything about it. I mean, it's meant to be a chain that links computers together so you can share storage and compute. Most of compute at this point is very centralized. If you needed to put anything anywhere, it's very likely that it's on an Amazon-owned machine or a Microsoft-owned machine, even if there's some other brand involved, even if it seems like a cool new startup. It's all running on data centers owned basically by those 2 companies and maybe Google. That has some advantages, but it also has some disadvantages. I think one of the disadvantages is they would like to optimize utilization and margin on the chips that they own. All those other GPUs that are sitting in pools all over the place, whether it's in a PlayStation or inside the on-premise data center of a Fortune 500 company like Pfizer, those things are underutilized, and it's because they're not linked together. Pharma companies, which is a big area of focus for us from our fund at LifeX, they're very large users of AI. The healthcare industry, so pharma and healthcare, is the largest spender as an industry on AI. It's a bigger spender than retail or finance or insurance or automotive or industrials like, shipbuilding or oil and gas, obviously. But you'd be hard pressed to find an industry that has more fragmented data and is spending more money on AI. And that was part of what brought our interest into this company. I've known Michael for about 15 years. I've been an entrepreneur around New York actually for a long time. I know him from Stanford, where I had done my PhD, and I started a couple of quite large companies in other areas before starting this fund. So when we came to Zero G and started thinking about it, we thought there is a shortage of compute that will not be remedied quickly. Even in this moment, if you're just looking at what's happening with Oracle and NVIDIA, I mean, NVIDIA is trading around $4 trillion or more, and Oracle just in the last 30 days just had a game-changing announcement on their forecast. Even the CEO of Broadcom, I think, accepted a pay package in September that involves him 10xing the revenues of Broadcom. And so the level of conviction on people on the inside of these companies and the kind of announcements that they're making about growth and demand, it could be 3 times more data center demand, or it could be 10 times more in the coming few years. We're at something like 1% of GDP is AI at the moment. I think there's a plausible scenario that it'll be 7% in 2030. And with that level of shortage of compute, I think the genius approach of Zero G is to help us tap into and link together all these systems that are underutilized, but do them in a commercially reasonable way where people get paid for their compute, and the advantage of being on that decentralized network is passed on also to the users. You have availability and decentralization, which is on its own really a critical advantage. It's quite separate from availability or cost. It's just that it's not all sitting in AWS. I mean, there are countries in the world and businesses who would rather not have all their data sitting inside some platform where one CEO decides or one government decides what happens. And I think these themes are hugely important. And so, efforts have been made in the past around decentralized compute. Some of them have gotten reasonable traction, things around storage, et cetera. But I've never seen a system like this one. And maybe George will tell us a little bit about the traction, but hundreds of thousands of machines have connected to the network. And it looks like it's going to be a major computing platform. I mean, it's already virtually the largest data center in the world. And they just made it by publishing a blockchain.
And you pointed out to the decentralization aspects, right, that bring some form of less reliance on big centralized system. How does the decentralized part fit?
Yeah, I mean, decentralized is important for the reasons that if you're at a conference like this one today, you hear about decentralization and its advantages. For AI, it has a number of specific benefits. The models that we're using, so forget about who owns the chips. Now just think about who owns the models. You can't see inside those models or what data was in them or how they were trained or aligned. And I think it makes sense to sort of trust, I guess, these big providers, but maybe it doesn't. And maybe it doesn't make sense to trust them with your own critical data. If I were a pharma or a healthcare company or something, I'm not sure I want to rerun my safety, security, and privacy tests every single time the models are updated over there. I'd rather see what that model is and have some open weights. I think it's not really possible to do in a trusted way that's verified unless you adopt an approach like zero gravity has. So decentralization is just a paramount thing for certain kinds of data. It's very important for finance and for health and some other use cases. And unless there's a legitimate high volume, high capacity player that offers that kind of decentralization, I think we'll never trust what's going on with our models.
Mm-hmm. And so, well, let's get straight on the zero gravity part then, right? So George, over to you. Can you give us start with a quick overview?
Yeah, absolutely. So it was very well articulated by Amol. But so with Zero G, initially we started as a decentralized storage and data availability solution because we realized if you want to bring AI on chain, you need to up-level the infrastructure that is currently on chain by significant multiples and significant factors. And so we started from the ground up, and we started with the storage network, and then we were able to develop a novel mechanism where we partition data into a storage lane and a publishing lane. This allows us to basically save a ton of money. Our storage costs are up to 80% less than the traditional Web 2 providers like AWS, but it also allowed us to infinitely scale the network. And now when you talk about complex AI workloads, AI agent networks, decentralized LLMs, if you want to store any of that data on chain, in the current landscape, it's not possible. But with Zero G, it is possible because of this novel partitioning mechanism. It allows you to retrieve data that is only relevant at the time it's needed, and it has an archival node where you can just store data that isn't accessed all the time frequently. And so that was the first product. I would say we have over 400 projects building with Zero G. The number one integration point is our storage network. It's a fully decentralized, censorship-resistant, infinitely scalable storage network. And it is the fastest cold storage network in the entire Web3 space at 2 gigabytes per second in throughput. So the customers, the builders, the enterprises are really excited about Zero G storage. Then we go into the compute, which Amol mentioned. When you talk about compute, along with our service marketplace, what we're able to enable is decentralized inferencing and fine-tuning and data verification and model training. Now, normally blockchains don't solve these problems. These are solved by specific AI companies. But with Zero G, because we have the decentralized storage underneath, we vertically integrate the compute network, and we're able to allow the community to participate in training of AI models. They can submit their data, which is hosted on our storage nodes, and then the data is submitted to models, and the models are hosted in our compute network, and then the training occurs. So why would you want community to participate in training of models? Well, several reasons. When you use OpenAI right now, you're not really sure what the model weights and biases were that led to the prompt leading to the output. There's no transparency. But if it was your data that it was trained on, and you could see the on-chain provenance, right? You could see which aspect of your data was used in order to get that actual answer for you, then there's a trust element that is there, right? We don't know if there's malicious data injection when you use ChatGPT. We don't know if there's a company paying OpenAI to bias results in a certain way. But when you do a decentralized model training and model hosting, the model weights, the biases, the source of the data, the version of the data, is it updated data? All of that is fully on-chain and transparent. And so the trust element is established. And then we talk about monetization. If you are contributing by using these platforms, these LLMs, technically you're making these LLMs smarter, and you're increasing the enterprise value for the companies that are owning these models. So where is the value distribution back to you? It doesn't happen, right? And in the way that you pay a subscription fee versus them paying you for your data. So this is where blockchain truly solves this. There's a lot of memes about blockchain solves this, doesn't solve this, but I actually believe the whole monetization aspect of data is something blockchain is really good at, because there's that clear transparency and clear provenance records of the contributors of the data. You can easily enforce royalties or rewards back to the contributors. And so now we have this initial, what we call training offerings, right? We have this ability to create new financial products where you can actually monetize people's data, monetize the actual AI models, and then in the end, if it has enterprise value, you can even share revenue back to the contributors through the token. And so the Zero-G token is a very important part of this entire ecosystem, because number one, you can pay for Zero-G storage, you can pay for compute, and then you can pay for data availability and the gas fees for the actual L1 chain. But the real benefit, which is something that no other chain can actually do, is say, if you're an active participant in the AI applications, you can get Zero-G tokens as rewards. And this is something that's just pretty cool. And I think, the DAT, right, that